Hello, everybody. Thank you so much for joining in today. I really appreciate the time and the effort that you guys have taken out for attending this webinar today. So in today's financial landscape, the banks, they must adhere with strict regulations that are associated with KYC and AML laws. Now, since the 2008 financial crisis, the banks and the financial institutes, they have been bombarded with financial regulations so that they can safeguard the financial systems and the consumers, along with increasing the overall transparency of the system. So, in today's session of our, we are going to talk about AML, the challenges that the banks and the financial institutes are facing to comply to these regulations. And at the last, we'll also talk about the measures that you can take as a fintech industry to comply with those regulations. I am 𝗱𝗶𝘀𝘀𝗀𝗀𝗀𝗀 from DigiPay.Guru, and today I'm going to talk about and I'll take you through this presentation of ours. So, like I said, I'll start with the basic introduction of AML. What is the current scenario in the market? What are the challenges that are being faced by the bankings and the financial institutions? What are the measures that you can take to comply to the AML regulations? How do you build an effective AML framework? And I'll end the session with the closing notes wherein I'll just give you some key takeaways. And in case if you have any queries, any topic of discussions, you can always go and put it in the chat box. At the end of the session, I can go through them and we can discuss over those points. All right. So anti-money laundering regulations, they are basically defined by financial authorities to clamp down on the financial crimes such as money laundering and terrorist funding or terrorist financing. In the traditional banking sector, the AML compliances, they have been compulsory for quite some time now. Similarly, the fintech industry, it needs the AML regulations to maintain a crime-free system that stops or avoids the flow of illicit funds or the illegal funds. Now, businesses that are operating under the financial sector, such as fintech or insurance firms or credit unions and even the crypto firms, they face concerns in balancing the AML compliances, the operating costs, and the fraud risks. There is a Paris-based AML watchdog called the Financial Action Task Force, which oversees the global financial landscape, and it points out to the countries that fail to implement the stringent measures that are combating to the financial crimes. Now, these regulations, they are various, like there are numerous regulations, and they can be complex as well. However, it is not possible to just skip them. We do need to comply with these regulations and the standards. Now, the emphasis over here is to understand the importance of the AML and thereby investing appropriate funds, time, and efforts to the compliance so that you can avoid the penalizations and you are able to identify and avoid the AML risks. Now, as per the study conducted by Renaulin, the estimated amount of money that has been laundered globally in 1 year, it ranges between 2 to 5% of the global GDP, which, if I have to put it in words, it's between $800 billion to $2 trillion as per the current US rates. Now, based on this statistics, we can clearly see that the banks and the financial institutions, they are facing several challenges in managing the risks that are involved in assessing the status of the AML and identifying the vulnerabilities therein. Now, increasing number of complexity and the disparate transactions of the frauds and the cybercrime, they add up to the situations. Now, just a second, there are some people joining in. Okay, I'm sorry, there were some people joining in. So just a second, I think there are a few more people. All right, I guess we are set for now. All right. So I was talking about how the banks and the financial institutions, they are facing challenges to address the AML compliances. And to address these challenges, the banks, they need to ensure that they have proper data protection, they detect the fraud in time, and they prioritize the compliances in accordance to the FATF regulations that I talked about earlier. So here I have just jotted down some important challenges that are currently being faced by the banks and the financial institutions. First is the rapidly changing regulations. Now, banks and financial institutes, they find it difficult to manage the cross-border and the multi-jurisdictional AML requirements. And along with that, it is also difficult to manage the ever-changing CDD requirements, that is the customer due diligence requirements. Then there is a lack of skilled personnel. Now, getting your skilled resources who is having the in-depth knowledge about the AML, it can be a challenge. Other than that, onboarding of such personnel, it involves a lot of time and the cost and the attrition as well. Once the personals, they have been onboarded to your platform, they are looking into the compliances, the organizations, they need to make sure that they invest considerable amount of time and efforts in keeping those personnel abreast with the changing regulatory requirements. And the third one that we jotted down was about complicated processes and the technologies. So AML compliance, it requires that the banks, they have a place set up for the various processes and the technology solutions. Now, this will consolidate all the KYC data and the systems in a single repository. Now, they also need to create an infrastructure for the cross-channel detection of suspicious activities. They have to improve their data quality and standardize the data so that they can enable a centralized analysis of fraud and the financial crimes. This is a study that has been conducted by Compliance Week. Now, it says that in 2019, AML non-compliant banks, they paid 6.2 billion fines globally, and which increased to 10.4 billion fines by the end of 2020. So the global regulators, they have made it very clear that it is not only the responsibility of the traditional banking or traditional financial institutions to comply with the regulations. Complying with the regulations, it is of critical importance for companies that fall under the fintechs industry or the financial technology sector, because they are seeking to compete against other virtual banks as well as the traditional banks that are currently in the business. I think there are new joinees. All right. Okay, I guess everybody is in right now. All right. So, what are the measures that you can take as an organization to comply with these regulations? First is to enhance your data management capability. Now, it is necessary for the companies to establish a robust data management framework that would eliminate any ambiguity that exists between the functions and the lines of defense. This it also enables that you have a seamless collection, consolidation, and governance of the AML data. Second is to strengthen the data and the tech infrastructure, thereby harnessing the emerging technologies. Um, okay, so it is important for the companies to integrate automated system that uses the emerging technologies and tools such as cloud computing. It could be AI, it could be machine learning, so that they can easily screen those transactions and detect any suspicious activities. They can also augment the SARs, that we known as the suspicious activity reports, and reduce any false positives. But it is very important to recognize the fact that human judgment, it can never be removed entirely. These tools and technologies, they help you, but still there might be some errors human that can be present in there. Third is to update the policies and the procedures. Now, the companies, they should align to the global as well as the local policies and the standards, and they should keep on changing their regulatory compliances with the time. It is very important to have an integrated framework to track the regulatory requirements, the compliances that we have in the system, to supervise those requirements and update the policies and ensure that the right and the regular reviews and approvals are being done by the senior personnel that's there in the team. And last is to ensure the adequacy of resources. Now, this talks about how the companies, they should periodically review these resources to ensure that the team that is working on the compliances, they are resourced suitably and they have the right subject matter knowledge given the times of evolving AML landscape. Just a second, few more attendees, I guess. All right. So I spoke about the measures. Now let us understand what are the different kind of compliance checks that can be done. So there are numerous number of compliance checks, starting from the customer acquisition analysis. Now, customer acquisition analysis, it talks about having effective services and data collection analysis so that you can gain a full understanding of any new and your existing customers. Then there is the customer due diligence, which is also known as CDD. It involves vetting of the customers to ensure that the services, they are not being provided to a money launderer, or it is not being provided to a terrorist financier. So how we do that is we have to run the customer information that we have through the databases that are continuously being updated. This it gives fintechs and the banks the best chance of detecting any false information, and it also helps them to filter out any unwanted customers that should not be there in the platform in the first place. Similar to the CDD measures, there is the sanction screening. Now, fintechs, okay, so sanction screening is all about identifying the individuals who are sanctioned at the international levels. So, we should have the sanction screening tools to ensure that any customers who are subjected to the international sanctions, they are detected and they are rejected. Identifying the sanctioned individuals and politically exposed persons, which is also very commonly known as PEPs, it can actually help you prevent the compliance infractions, and it then thus minimizes your AML risks and all. Then there is the transaction monitoring. Now, once the consumers have been onboarded into the platform, they have been vetted properly and with the appropriate approvals, it is very important to have effective transaction monitoring system in place so that you can detect any suspicious, fraudulent, or erroneous transactions. This proves to provide another safety net to protect against the AML risks that may occur or that will be occurring in the future. And lastly, there is the changing compliance regulations. Okay, so the compliance regulations, they work continuously to improve, and they create and update their policies so that they keep on combating the money laundering and the terrorist financing activities. Now, because this is being done so frequently, it creates a possibility for the notorious ones to identify the blind spots in the regulations and use them to their advantage. Hence, it is very important that the compliance team that you hire or the compliance team that you have, they stay up to date with the latest regulations, and they are equipped with the modern tools for meeting the compliance standards. Let's talk about the building of an effective AML framework. Now, there are 5 core elements for building an effective AML framework. Uh, it starts with the customer onboarding. Then you have to go on monitoring the system continuously. So ongoing monitoring, transaction monitoring, changing circumstances, and risk scoring. Customer onboarding, it includes a thorough screening of the customer with the help of KYC and due diligence checks that we talked about earlier. However, the onboarding experience of the customer, they should not be compromised. The customer should have a seamless onboarding experience, but at the same time, you should also make sure that you collect all the required information in the most efficient and effective manner. Some of the questions that you can consider or ask is your platform able to identify any fraudulent documents? Can the platform confirm that the person who is doing the transaction are they alive or not? Can your platform uncover the adverse media risks? Now, adverse media risks it talks about the businesses, and if any business are in the news for the wrongdoings. So, can it uncover those details or not? Can it verify whether the person that you are doing the business with is same as they pretend to be while the onboarding experience? And can all of these information can it be collated into a single backend system to consume and analyze for a later stage? Now, it is very important to note that all these checks that you are doing, all these checks, it should be auditable. So you should be able to audit each and every check that you are doing. Next, alongside the customer onboarding, is the monitoring of the ongoing customer behavior. Just a second, I guess there's another participant in there. Okay. All right. So, okay. Alongside the onboarding, customer onboarding, monitoring of the ongoing customer behavior, it is also very crucial, because red flags, they can come at any stage, and ongoing checks are necessary to assess the changing risks that may come. The questions that you can consider asking in this particular stage is, are you getting the right alerts from the data sets by screening the data sets or not? And if yes, how are these alerts manifested in your overall customer records? So just like how you monitor the customer's behavior, monitoring of the customer's transactions is also very important. So the questions that you can consider in this particular cases is any customer sending the payments to the sanctioned entities or not? Has there been any sudden changes in the way the customer is transacting? I think there are new joinees. Okay. Okay. Is there any change in the way that the person is transacting? Does the consumer's account has ever been taken over, or is there a certain spike in the number of transactions or the amount of the transactions that they are doing? So any such alerts, it can be tracked while you monitor your transactions on a regular basis. Then is the changing circumstances. Now, monitoring your changing circumstances, it is a form of perpetual KYC, wherein you repeatedly have to go through that process. Now, the financial institutions, they have to be very mindful about when do you want to introduce a new KYC process. The questions that you can consider in this particular scenario is whether the current onboarding process allows you to monitor the changing circumstances or not. And if, for example, if there is an address change in the platform, if a person is trying to change their address, is the platform requesting that particular user to upload the documents or not? And if yes, whether those documents are being verified in the similar fashion how you did in the earlier KYC process or not. So these are the questions that you can ask in this particular scenario. And then we have got the risk scoring. There are several factors that contribute to a customer's risk score. It is important that you ensure that all the information that is collected, it is in a consumable result set that can be fed to the risk engine on regular basis, and that would in turn help you to ensure that the customer experience is consistent with any possible risks that are tagged against them. I think there are new users. Just a second. Okay. Right. Okay. So now to summarize and put it all together, I would like to say that investing in strategic approach instead of a reactive one or reactive approach, it helps the banks and financial institutions to reduce the risks and benefit from the anti-money laundering solutions. The first thing that needs to be considered is to evaluate the entire KYC process, the KYC and the AML process right from the beginning till the end. Whenever you, as a bank or even a financial institution, whenever you are starting a relationship with a customer, how you onboard that particular customer and verify their identity, it sets the foundation for your entire AML process. Ensuring that the individuals are screened thoroughly through the right databases to identify any links to the criminals, to politicians, to terrorist groups, or even the public figures. It is very crucial in the defense against the money laundering. Banks and financial institutions, they need to consider how to connect all of this data of the consumer's information to their KYC and AML processes to screen any suspicious activities. And hence, we can conclude by saying that investing in the compliances can help the banks and the financial institutes a big time rather than ending up paying fines or penalties or even losing up their licenses. So that's all for today. If you have any questions, you may put them in the chat and I'll just look into it. Okay, we already have a lot of chat. We will be sharing the PPT with you after the sessions. I'm so sorry about the knocking. Sure, the PPTs can be sent after the sessions. If you have any questions regarding the AML, you can ask me right now, Or you can also write to us or email us your queries at hello@digipay.guru, and we'll get back to you. Okay, so how do you ensure that the AML plan and the processes are properly implemented? So, like I said, right, in this previous slide itself, there are different questions that you can ask at each of the stage, whether your system is capable enough to identify or verify the documents or not, whether your system is able to identify any sudden spike in the transactions or not, whether your system is capable enough to verify the KYCs in accordance to the changing circumstances or not. All these criterias and all the questions that can actually give you a better idea into understanding if the process that you have implemented is has been implemented properly or not. Yes. Any other questions? Okay, someone is typing in. Are there any kind of identity and AML check tools available? Of course. So, like I mentioned, there are different checks that can be done. So, CDD is one kind of check. There are databases that are available, like the government allotted databases itself. You can go and check the data with those databases. There are vendors who provide you with those checks as well. So we can collaborate with those vendors and get the documentations and get the proper vetting of the customers be done through them as well. So there are different checks and tools that are available for that. Thank you so much. The link to the AML certification program, if there is any, we'll get back to you. You can always write us to, um, you can email us your concern and we'll get back to you over there. How does the AML procedure start for fintech? So, like I said, everything, I mean, the base of the AML or the foundation of the AML is actually making sure how you onboard a customer. So, even if you are a fintech, even if you're a bank, the onboarding of a customer, it plays the major role in ensuring or that is where the AML procedure starts, how you onboard the clients. Once you onboard the clients or the customers, you have to do regular checks on their behavior, and then you have to at the same time monitor the transactions that are being doing that are being going on. So that is the way that you can go on. And just to answer your question in a very simple way, it starts with the onboarding, the AML procedure. I think we are running out of time now. Just a few questions we'll be taking, and then you can just email us your queries in there in the email ID, that is hello@digipay.guru. There are so many ML tools that help you to detect some red flags. Of course, we can have the recommendations given out to you. I'll appreciate if you can just write down to us instead, because we are running out of time over here, and we need to. Can you come back to the closing note? Of course, I can do that. But I'll just end the meeting right now. We are running out of time. If you have any other questions, please write down to us and I'll get back to you. Thank you so much for attending today's session, guys. Appreciate it.